Well, good morning, everyone. It's March 4th. It's a Thursday, and let's get into it. We've had the jobless claims report, one of the biggest reports of the week. Will it matter this week? Probably not. Why? Because the whole Wall Street is focused on Corona, and more Corona. And I wish it was Corona beer, but unfortunately, it's the coronavirus. Getting back to the report, the actual number was 216,000. The consensus was 215,000. This report is perfect. There's nothing wrong. It's telling us that the economy is doing well. Of course, this doesn't talk about what will happen, the projections, coronavirus, but as of right now, the U.S. economy is humming along. Now, I wanted to talk about something important today. I wanted to talk about how, and this is an important topic, and I'm going to go on a little rant here, but folks, it's important. So, I'm reading the report, and again, the market was up 1,000 points yesterday, and now overnight it's down about 400 points on the Dow. I'm not exactly sure, but somewhere around 2%. The point of the matter is, I read this yesterday. Thursday's decline comes after the market rally. Today's Thursday, so they're talking about yesterday. Particularly in the U.S., on former Vice President Joe Biden's strong showing in the Democrat presidential nomination, investors see him as more business-friendly than his main rival, Senator Bernie Sanders. Well, that could be very true. But here's the problem with this line right here, and this is what investors don't seem to understand. They read, the market rallies 1,000 points. People who write this, they need to find a reason for it. They can't just say, hey guys, the market rallied 1,000 points and we don't really know why. Doesn't sound very sexy, right? And the same thing, the market falls and crashes. They got to come up with something. It's got to be the coronavirus, right? What else could it be? Well, sometimes, most of the time, let's say there's nothing going on and the markets are open and a report comes out and something really crazy happens. You can probably say the odds are that report caused the movement. But in a case like this, and let me show you what I'm talking about. Before this coronavirus scare, I was telling this to anybody who would listen to me. If you don't believe me, just go to any of my videos before this crash occurred. The percentage of stocks in the S&P 500 were at 84%. It was the highest momentum level. It was the highest overbought momentum levels that we've ever experienced in 5 years. And I would tell anybody who would listen, folks, the market is setting up for a nice big doo-doo. And guess what happened? So did the coronavirus play a role in this downside? Of course it did. The panic, but I'm not certain how much of it was the coronavirus, because the market was overbought to begin with. Also, let me show you something else. Nasdaq. The Nasdaq 100 is still above the 200-day moving average. Look at the S&P 500. It fell below the 200-day moving average. Now, I'm going to ask you an interesting question. Which stocks do you think have more impact from China, Asia, Korea, and all of those places that are infected with the coronavirus? Do you think it's the Nasdaq or the S&P 500? It's the Nasdaq. Chip stocks, growth stocks. Which sector rallied the most when the trade war agreement phase 1 was done? It was the Nasdaq stocks. It was the tech stocks. That's what caused technology to go to first place. Even when markets were getting defensive, when I was telling everybody markets are fragmented, utilities and technology shouldn't be in first place, Nasdaq is still leading. Why are tech and growth stocks, the ones that have the most vulnerability to China and Japan and Korea, why are they the strongest stocks now? Does that make sense in light of the coronavirus? I don't think so. Now let's talk about this. Markets rallied 1,000 points after the report came out. Look at this. Let me see this. How do we really know that the market rallied 1,000 points because of this? Maybe the market rallied 1,000 points because momentum levels went from so high to so low that the market needed a bounce. You see the point? The point, what I'm saying is, don't believe Wall Street when they tell you something happened because of this or something happened because of that. We really don't know. And we really don't care because we're trading based on technicals. Have you ever heard the Wall Street say after a big down day, Wall Street went down because of loss taking? They're always saying profit taking because it sounds better. How come they never say loss taking? Remember, for every winner, there's a loser. For every guy who pocketed the money, there's a loser. How come they never say the Wall Street tumbled today because traders were selling and taking losses? Whenever you have someone taking profit, you have someone taking losses. So again, I want to point out inconsistencies in what you're hearing from Wall Street and what you're really seeing in the market. Because again, I don't know. I'm sure coronavirus had something to do with the market selling off like this. But I could promise you, I can guarantee you, it had a lot to do with the fact that momentum levels, that rubber band was stretched out more than it's ever been in 5 years. And it needed to snap back. And when it snaps back, it doesn't just snap back all the way. It does this. It moves around a little bit. So again, please, please, please keep in mind everything Wall Street tells you, and don't always believe what they tell you is true, because there's a lot of factors that are out of whack. Now, S&P is still the weakest sector, and it's still underperforming the Nasdaq. My concern is, will the second shoe drop? And if it will, this whole Nasdaq market cap will start trading below the 200-day line, and it'll push the S&P 500 back down below the 200-day moving average. Now, right now, we're still at the 200-day moving average. Until the S&P starts trading above the 50-day moving average, let me show you where that is. Let's make this blue. Till the S&P starts trading around here, we're going to be in a twilight zone. And if we're going to be in a twilight zone, we're going to see a lot of volatility and lack of trading action. Now, that's where the Nasdaq right now is. It's in the middle of a twilight zone. Until it's above the 50-day line, I'm going to be neutral on this market. Now, there's a few things that I like. I like the fact that the put to call ratio went all the way to 80, which means calls became prevalent yesterday, but it closed back up at 125, which means there's still a lot of fear in this market. I like the fact that volatility is still holding higher and starting to come off a little bit. This is the third highest volatility level, fear level we've had in the S&P since 2008. This is 2008. So what I'm telling you is we may be close to a bottom, but we still have that question mark with the Nasdaq. I'm really concerned that the Nasdaq did not underperform the S&P 500, and the momentum levels were just as high. Let me show you this. Let me show you the momentum levels in the Nasdaq so you could see what I'm talking about. So my question is, first of all, why is the Nasdaq leading? Why is the Nasdaq leading when it has the most exposure to what's going on right now with this coronavirus? Is it maybe not all coronavirus? Could it be just a technical selling action? That would make a lot more sense. But look at the momentum levels. Highest levels in, let me go to 5 years. Look at that. We've went one time higher, and look what happened afterwards. And we went up there again, and we went only 43. We went from 84% of stock. We went from 85 stocks in the Nasdaq 100 trading above the 200-day moving average to 43, but we didn't go lower. We didn't go to the 14. We didn't go to this level. And my concern is that we're going to go down. The second leg will drop. Why? Because look at the Nasdaq. The Nasdaq did it. The Nasdaq went all the way to the bottom, right? This is percentage of stocks trading above the 200-day line. We went all the way bottom. We're kind of in line with what we were seeing. Let me see. This is in line with 2010. Let me go back to 2008. Not in line with 2008, but in line with everything else. But if you look at the Nasdaq, not even close. So my question is this. My concern is this. If the coronavirus is the big catalyst for all of this, then why didn't the Nasdaq take it under the chin? Why did the S&P and the Dow take it under the chin twice as bad as the Nasdaq? That's a big concern I have, because the Nasdaq has a lot more exposure. Chip stocks, they're not made in the US, they're made in Asia. Why is the Nasdaq holding up so well? I'm concerned about that. At the same time, momentum levels are again. So here's my concern. My concern is that this downside now is not being caused by the coronavirus, because the Nasdaq is holding up better than everything else. And if it's holding up better than everything else, and if it's not caused by the coronavirus, then what is causing the market to cool off right now to this degree and cause such volatility? And if that's also the case, then maybe the Nasdaq will have that second drop. And if it does, it's going to put the S&P 500 back to these levels right here. That's my concern right now. This is why I'm not following Wall Street's rationale for why things are causing. They see a market drop, they take the best story that fits it, and they connect it to it. Folks, that's just not how Wall Street works. Right now, stay tight, stay on the sidelines, wait for market to show its hand. This is not a time to be a hero. Volatility is way too high to buy options. Bear call spreads are good, bull put spreads are good. Don't buy options because they're very expensive right now. Also, put to call ratio is out of whack, favoring the put side, which means there's a good chance we're going to see some upside in the market. But again, I'm very concerned with Nasdaq being so much stronger than the S&P 500 on a momentum level, on market internal level. Right now, only 45% of stocks in the S&P 500 are trading above the 200-day moving average, where with the Nasdaq, we now have 61% of stocks. So Nasdaq is trying to move towards bullish territory, but it hasn't bottomed out, and that's a major, major concern. Sorry that I went so deep today, but again, I want you to be careful of what you're hearing from Wall Street and how you think it's going to translate into the market, because it's not always how it is. And again, I would make more out of the economic report that came out, but it's right on target, and the markets are focused on volatility, third highest volatility in the last decade, and momentum. I do like the fact that bonds look like they peaked out yesterday. If we start cooling off on the bonds, and if the stocks start trading above the 200-day moving average, and if volatility declines, I'll be happier in the S&P 500. But I'm really concerned with the fact that the Nasdaq is leading, when if the coronavirus is the underlying cause for all of this, the Nasdaq should be lagging behind. And also I'm concerned that the momentum levels on the Nasdaq never bottomed out. They went down all to 43. So 100 stocks in the index, we had 85 or 84 and a half trading above the 200-day line. And now we had all the way down to 43. Now we're at 61, but we don't have that bottoming that we've seen. And as again, Nasdaq, tech stocks, more volatility, more exposure to China, Japan, and Asia than S&P or the Dow, but not seeing it. So that's an issue. All right, let me change topics real quick. Folks, I know the market is challenging for a lot of you right now. This is not an easy market to trade. I've got some help coming, all right? I've got a training for you. It'll teach you how to take advantage of the market right now and avoid all of this noise. Stocks that are not correlated to the overall market, they're a little smaller, no options. Option volatility is through the roof right now. Options are expensive. So just the stocks, smaller stocks, very little correlation to the overall market. Double, triple, quadruple digit gains, 1 to 3 weeks. Not buy and hold. You don't have to sit there forever buying and holding. And again, they have very little correlation to the stock market, which means they don't move in line with the S&P and the Dow and all those stocks that you're seeing now, where when you know if the market is up 1,000 points, you know your portfolio's up. If it's down 1,000 points, you know it's down. Avoid that. Get out of that right now. You don't want to be dependent on this market. Low correlation, not a lot of volatility, no downside right now. Check this training out. It'll teach you how to avoid this mess that the global economy is in right now, and give you an unfair advantage. Triple, quadruple digit gains, no correlation to the overall market, no options, only holding for a week to 3 weeks, big gains. Follow the link below. Learn about this now. Get in on this training. There's no cost. And you'll get an unfair advantage. Again, folks, don't believe everything Wall Street is telling you. Use your own head. If it was all coronavirus, then the Nasdaq would be lower right now, and it's higher. So there's something else going on. Fortunately, we're technical traders. It doesn't mean that much to us. We don't really listen to what Wall Street tells us. We look at Fed data. We look at hard data, not soft data. But again, anytime you hear something on Wall Street or hear someone's opinion, think twice and ask yourself, how come they never say the word loss taking? How come they always say profit taking? All right. Follow the link below. Check out this new training, non-correlated, smaller stocks, diversification, triple, quadruple digit gains, and without following this circus that we're seeing on Wall Street right now. Bye, guys. I'll talk to you tomorrow. Take care and watch your butt out there right now. Volatility's high.